Officially in a recession. The economy contracted by 0.7% in the second quarter. This is after it contracted by a revised 2.6% in the first quarter. Now, recession is defined as 2 consecutive quarters of economic decline. The largest negative contributors to the growth in GDP in the second quarter were agriculture, transport and trade. The agriculture, forestry and fishing industry decreased by over 29%. The decrease was mainly due to a drop in the production of field crops and horticultural products. The manufacturing industry contracted by 0.3% in the quarter, mainly due to a decrease in the production of motor vehicles, parts and accessories. The main positive contributions came from the mining industry and finance, as well as real estate and business services. The mining sector increased on the back of higher production in platinum group metals, copper and nickel. The economy will likely grow at a much slower pace this year than was earlier thought. Isaiah Mhlanga, who is the chief economist at Alexander Forbes, joins me now. Thanks so much for your time on SABC News. What can we read from the fact that those largest negative contributions to GDP were agriculture, transport and trade?
I think if you look at agriculture, of course, summer rainfall came later than they usually do. So we didn't get the production that we're supposed to get in the second quarter, which means it's likely to come through into third quarter. But I think the important thing is we are in a technical recession, and this is not the making of the past 6 months. It's the making of the past 10 years. The mismanagement of the economy is what brought us it at this point in time. But going forward, it means that for this year, we are going to have lower economic growth than what was projected, and this will have implications for our fiscal numbers and credit rating agencies. We've already had some statements from S&P saying they expect a fiscal slippage this year of 0.4 percentage points. We think it's going to be much higher than that, which means next year in February, we're likely to see a slightly different budget being presented than what we got in February this year.
I'm glad you brought up the issue of mismanagement of the economy, because there's a conversation around how much local factors such as that and international markets play in a recession taking place.
I think if you look at growth internationally, almost all emerging markets, except for some few like Argentina and Turkey that have internal problems as well, they saw economic growth improving. If you look at IMF forecasts, they have been projecting global growth that improves, while ours have been stagnant for some time. And it says this is not a global phenomenon, it's a problem with our domestic economic policies and how we have been managing the economy. So in an environment where the correlation between South Africa's growth and global growth has been 0.7%, historically we have decoupled from global growth, which means we don't benefit as much from the global uptick because we don't produce what we need to be selling to the rest of the world. So when the rest of the world is growing, we don't have anything to export. But for the second quarter, yes, export contributed positively to economic growth, which is again another factor that proves that it's our own domestic issues, because the productive sectors have not been growing enough to offset some of the issues that we have. But over and above that, if you look much more closely, it's the consumer-facing sectors that have been underperforming. You talk of the issues of trade. We had an increase in VAT at the beginning of the year. We also have consecutive fuel price increases that we saw over the past couple of months, which means they're eating into the consumers' pockets, which decreases the purchasing power of what they earn. We had unemployment rate that went up. All this taking place at the same time, which means the consumer is under extreme pressure and they're not going to be spending as much as they would.
Let's talk about how we can try and move out of the situation. Normally in times of recession, it's looked towards the bank for easier lending conditions, the Reserve Bank for interest rates and quantitative easing and government policy as well. What do you suggest we do here in South Africa to get out of the recession?
I think we are running out of options in terms of what we can do from a policy side. Not much is expected from the central bank. Remember, the mandate of the central bank is not necessarily to kickstart economic growth. It is to maintain the value of the currency for the benefit of a stable economic environment. So you should not expect interest rate cuts, given the emerging market currency weakness that we have is going to have implications for inflation by pushing it upwards. So the central bank will be standing ready to actually hike interest rate if the currency remain quite weaker. So we don't expect anything from the central bank. If you look from a fiscal point of view, we have fiscal constraints, which means our debt to GDP ratio has been increasing for a number of years. We don't expect a fiscal stimulus. Yes, we hear a lot of words being thrown around of a fiscal stimulus, but a stimulus is new money that is being injected in the economy. But as it stands, it seems as if it's just spending reprioritization from other departments to other departments, which doesn't really inject new money into the economy. What you need to see is one policy certainty that is going to attract businesses into this country and invest. Unless you have new investment by the private sector, which is primarily responsible for generating employment, you are unlikely to see the economy turning around. So we need policy certainty. We need clear sectors where government says these are our 4 or 5 priorities that we're going to focus on, and provide incentives over and above the policy's certainty. If you look in the vehicle manufacturing sector, for example, we have incentives which are given to car manufacturers. That's why that program has been successful in employing a number of people over the last couple of years. Why can't that be done in other sectors? I mean, if you look at what we consume a lot of manufactured products. Why aren't we producing those products locally? If you look at the rest of the region in Sub-Saharan Africa or SADC, if you were to be, you look at what they consume as well, a lot of manufactured products. Why can't we produce those manufactured products and export, given the proximity that we have to those countries, and actually close our current account deficit, which is one of the issues that we have as a country? So we have to think differently in how we approach economic policy making in a coordinated way, which will make South Africa grow.
Thank you very much for your time. Isaiah Mhlanga, who's the chief economist at Alexander Forbes, speaking to us about a top story there. That's the recession that South Africa is in now.